Good afternoon, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, June 27th, 2025. Ron Quaranta here with my co-hosts, David Brill and Joshua Ashley Klayman. Good morning to you both. Before we begin, our usual disclaimers for everyone watching. Thank you so much for joining us, LinkedIn Live, YouTube, X. If you've got questions for Josh or David or I, please put them in the chat. Nothing discussed, please, is accounting, investment, legal, or tax advice. And certainly the things that David and Josh and I are discussing are our own opinions and don't necessarily represent the opinions of our firms. David, Josh, we made it through the heat wave and it was terrible. How are you both?
Doing great. Happy to see it's not 100 here anymore. I come to New York for a week and it's hotter than it is in Florida, so that wasn't on my scorecard.
Well, Josh retired to the beachfront compound in New Jersey, as I recall correctly. Correct, Josh?
That's correct. At least it is beach near. Yes.
A short walk.
Yes, exactly. But yeah, for those at home, you can all see we inadvertently, I guess, as an escape or as a reprieve from the hot weather, all wore light blue today. So
I gotta ask, I don't know why I wear formal shirts anymore. I'm just going with like shorts and a t-shirt going forward. Josh, David, there's a lot to cover. Despite the heat wave, there's been a lot of news. Josh, let's dive into it from the litigation side. I thought it was really important, and it dropped yesterday. Judge Torres kind of slammed a hammer down on the SEC and Ripple. It was their second request for an indicative ruling, and she said, heck no. Do you want to talk about that a little bit?
So, I guess at least my crystal ball was not right on this one. Right? I remember us chatting and I remember saying, oh, well, they try to do it the easy way. Now they'll try and do it the harder way. And it's just, you have to go through a process. But no. Judge Torres, I mean, listen, she is definitely, it appears, a woman of principle, right? A judge of principle, because she, had a very thoughtful opinion that, kind of split the decision for the SEC and for Ripple, and she's sticking to her guns. I think our colleague and friend Kayvan Siddiqui, he posted some quotes that I think were really great from a very dense opinion, which he pulled out. I'm just going to read them, and you can also see his post on LinkedIn, which I reposted. But one of the quotes says, the Supreme Court has emphasized, however, that the judgment of a court is not merely the property of private litigants. It's a final judgment that belongs to the legal community as a whole, and should stand unless a court concludes that public interest would be served by a vacatur. And then it goes on to say, the SEC, like any other law enforcement agency, has discretion to change course after an enforcement action is initiated. But the parties do not have the authority to agree not to be bound by a court's final judgment that a party violated an act of Congress in such a manner that a permanent injunction and a civil penalty were necessary to prevent that party from violating the law again. So sort of a takeaway from that is, the SEC may change its position, the administration may change its position, but Congress still makes the laws and courts still interpret the laws. And I guess, a district court, as we saw from other judges in the district, they were not bound by Judge Torres' decision or other decisions on that in the district. And I think Judge Torres is saying, and I'm not bound by the change of course by the SEC. Now, one important point, I think, is in the event that were reversed at a higher level, if it were appealed, then of course there would be a change, right? Because of course a district court judge would be bound by that. But I do think it's super interesting, also in part because the injunction was my recollection is in the original case, it was kind of unclear as to what exactly was being enjoined.
And Josh, to that, as I read it, and I didn't read the entirety of Judge Torres' statement, and you both know I'm not an attorney, but it was interesting to me because her commentary seemed to be, she put forward a permanent injunction prior. SEC and Ripple like, why don't we make that go away? And just like, no. And then she commented that the permanent injunction is based on the fact that not only did they do these things, but also there's a likely chance Ripple will do this in the future. So I guess the question becomes, I know, neither of you are litigators, but for our colleagues and the both of you, how do you get a permanent injunction? How do you get that out of the way?
Well, you know what? I want to add a couple of things, Ron. And although Josh and I don't litigate full time, we definitely, worn a litigator hat in various circumstances.
Sure.
Especially me being general counsel, I've definitely led some litigations in the past. I think what is really interesting, it's twofold. One is the judge also cited the need for extraordinary circumstances to modify a final judgment. And she stated that the parties didn't meet that threshold. And I think wearing our legal hats, I agree with that. I mean, just because, just because the SEC changed their mind on their approach, which are obviously, entitled to do, doesn't mean that her decision, should be rewritten. And I think we also have to think about it in terms of this. Basically, the SEC asked the judge to overturn her own decision and all the legal reasoning she put in it just because they want to take a different position. And judges are sensitive to that and don't like to see their decisions overturned or appealed. So I think that's another issue at play here that we have to be cognizant of.
And David, just shout out to Emma Channing, the suck it up strategy. Answer is to pull the appeals and go through with the appeal. David, I want to ask what might be an ignorant question, and Josh, let me, give me your thoughts as well. What is that threshold for those who don't understand what that legal threshold is?
What extraordinary circumstances are?
Yeah.
Well, it's there's not
it seems subjective is my point.
It's subjective, but I think what they're saying is really, a material change of the facts or a reason why the law shouldn't be applied the way it was. And I don't think, I think what's happened here is you can't put the genie back in the bottle. They went through this process and they negotiated this, they argued, they litigated, and this is what the judge concluded. And now just because, the commission's changed its view on it doesn't mean that, the genie goes back in the bottle. That's the way I think about
it.
Yeah, I mean, thanks. I agree. I think when we think about what the injunction is, it was, the SEC previously had been characterizing, at least in the allegations, right, Ripple as being egregiously violating, right? All kinds of really colorful, strong language intended to persuade the court at the time. And so the injunction really, if you remember, the case for those at home, which many I'm sure, or at the office, many I'm sure do recall, which is, that the sales to institutional purchasers, right, of XRP, those were deemed to be sales of securities, whereas on exchanges, those were not deemed to be sales of securities, even if they were being sold by Ripple, right, because the parties didn't know that. So the injunction had to do with the part of the portion of the transactions that the court had deemed to be securities transactions. So, I mean, really, that if the injunction isn't lifted, then I guess can Ripple make these sales of XRP other than in blind bid asks? Seems like perhaps no, although I guess others closer to the decision would be able to say this with greater certainty, because this is just my musing about this. I do think, though, this is very important also, this message, not just about Ripple, but just this message from this court. If I were a plaintiff's lawyer, I would be very intrigued by this, right? I do think plaintiffs' lawyers are going to play an important, maybe a big role, prominent role. I don't want to say important or not. I started to say important, but I'm just saying, I think they will play a role and will perhaps fill a void of litigation where regulators may not, at least federal regulators, may not be bringing the same types of actions. But it's just interesting because irrespective of how the SEC and the administration may change their position until Congress acts, I mean, the law will be interpreted by the courts as a result of the adversarial process.
Yep. David, if you had to take out your magic 8-ball and figure out what SEC and Ripple team do next, what's next? go through with the appeal, pull it?
I mean, I think I would leave the appeal on, wait to see what the market structure bill comes out with, and see if this scenario gets addressed in the market structure bill. So I would leave the optionality open.
Josh, did you catch that softball that David handed both of us? Because we go right now to the legislative stuff, and there's been news on Genius moving forward, and we also saw the news about it being passed in the Senate. David, Josh, there's been this really deep conversation from a legislative perspective about the stablecoin legislation in both the Senate and the House, and how does that get reconciled? And this idea that, well, this will be great because we'll bundle this all with the Clarity Act that is market structure, and this will all pass in one big, beautiful lump of crypto legislation. David, Josh, I think the three of us saw the news as so many of our colleagues did. That's probably not going to happen. So, David, you're basically saying market structure is going to take another year, and we'll all be sitting in suspense on SEC v. Ripple?
Well, I think, from a legislative strategy, I think that we should look. Genius got through the Senate. I think the bill should be reconciled, and then we should get a vote and get it approved. I do have some concerns that the longer we wait, if another bill has to go through the Senate, will Democrats stay on board, 3 or 4 months later for the market structure bill, which will likely be more contentious because there's just a lot of different interests at stake. And I think the goals of the market structure are not contentious. It's how we get there that's going to be challenging.
Yeah.
Like I would say, Ron, let's take the win when we can take the win, and let's continue to fight for another day on market structure and continue to move forward on that.
Josh, we, as part of the legal working group conversations, and the three of us and so many others have spoken about this, I think one of the things that gets missed in the conversation when we hear they should have lumped it all together, it'd be great, is market structure is a bit more complicated, candidly, than some of the stablecoin legislation in both the Senate and the House. Would you agree with that?
I would agree with that. I would agree with that also because of the regulators that are going to have to, develop their own rules, right? In the Genius Act, for example, there's this express carve-outs for permitted payment stablecoins from various federal securities statutes, as well as the CEA. So I think, market structure is much more, I think, complicated because you're dealing with a market, right? You're dealing with market participants of all different sorts, as well as digital assets themselves and the classification. I am with David in terms of how I think we should proceed, although I do understand other people's viewpoints and I can appreciate them. Certainly, there are some who are afraid that if we pass the stablecoin bill in some form without getting the market structure bill up and moving alongside, that people will take their foot off the pedal, right? Because they'll take a win and they'll be excited about we got the stablecoin legislation through. I don't think delaying it, in my view, granted, I'm not a Washington insider. I'm not even a Washington outsider. But I do think when we think about some of the conversations that were happening during those kind of bleak times where it wasn't clear whether the Genius Act was going to actually make it through the Senate, where people were saying, wait, this is supposed to be the low-hanging fruit. If we can't get the votes for this, are we really even serious? So I think, President Trump had set some sort of August deadline for the legislation. Clearly, it looks like the market structure bill is unlikely to be, in my view, ready to go by then. But if we can get this done with the stablecoin bill, I think it's great, especially because we're seeing an explosion of stablecoins. And what projects are looking for and big players, household names are looking for is some kind of clarity. And I think that, there are some important differences with the House's Stable Act from the Genius Act, and including, just differences of opinion, including how much federal oversight is required and whether whether the issuers should be regulated like banks, things like that. But I mean, I don't think, I think we should just be careful having the perfect be the enemy of the good and not getting anything done. And I see there's a comment from Adam, who certainly has been very knowledgeable about this and about the process
It's worth reading the comment. A shout out to Adam Goldberg, WSBA member. Another year likely means no market structure bill. David is correct. Shocker. David is correct again. To flag the risk to Genius by getting tied to market structure. And I think the three of us fully agree on that. But I do want to hit on one thing. When we talk about the market structure bill, Josh and David and Clarity Act, full disclosure for everyone in the audience, the three of us, and as well as other members, are working on feedback regarding the Clarity Act on behalf of industry. We are not lobbyists, but I just want to make sure that's clear for everyone. But the one interesting thing as we talk about some of this, and it really is a diving into what Clarity represents. David, I had a conversation with some colleagues in New York City this week, and one of the comments, I wanted to see if you agree with this, was, well, Clarity Act and the market structure bill is really an opportunity to, I'm going to use the phrase, put the SEC in its place. I think that's not the best way to look at it, David, but it is an important distinction between what are the guardrails for SEC versus CFTC in the digital asset space. What are we missing in the dialogue there?
Well, look, fundamentally, we have to decide which agency should really regulate and govern crypto assets. And obviously, as we all know, there's entrenched views on Washington, and also this is also sort of land grab, and like this is going to be an important part of our economic future, and which agency governs it. It sort of will give them a land grab as far as how much of the total ecosystem they have going forward. So look, I think part of the reason why there was some animus towards the SEC was because they were taking a very like a mallet to the industry, or dropping an anvil on the industry, and not sort of working with it and trying to refine the rules to work with it. So it's difficult in the sense that I think people are playing favorites based on what the past has been and how the industry's been treated. And I think whatever we come up with needs to be lasting and binding, so that whatever the infrastructure is going to be in place will last and support the industry going forward.
Josh, let me know, give me your thoughts on that as well. But the other wrinkle to all of that I'm trying to understand as we work on some of this feedback is, notably, the CFTC is significantly smaller than the SEC on a resources basis. What is the impact of that if something like the Clarity Act moves forward and says, hey, CFTC, most of the burden's yours, get this stuff done? How does that work in your mind?
It's a good question. I guess I would imagine there'd be ask for funding.
Yeah.
Right, and hiring, and maybe we don't end up with a CFTC that's so much smaller than the SEC, if that's the case. I keep hearing, by the way, bubbling up this idea of, could there be a combined agency? I mean, I know that's something that's been suggested for a long time, including by Nancy Wojcik at Cooley for a long time. I don't see it happening, but my crystal ball is cracked and flawed. So all
Josh,
caveats apply there.
If you remember our Washington trip, I was also a supporter of let's combine CFTC and SEC. And I got rapidly told there's not a snowball's chance in hell that's going to happen. So there is a lot of work still to be done there. And again, looking forward to continuing the work with both of you on Clarity, and we'll probably have to pull Adam in for a conversation at some point. We've been talking about the SEC, and David, the war on crypto is over, but I'm going to go diving into the deep end of this pool. The former SEC chair gave an interview on Bloomberg, I think it was on Tuesday, and I'm really getting sick and tired of this script. One of his comments was, we already have stable coins. It's called the US dollar. David, why does that bother me so much when I hear that?
I don't know, Ron. I guess maybe when you were younger, you used to hold grudges, and that's come back in your mature days. Look, the 4 years preceding this administration were very difficult. Former Chair Gensler's a private citizen, and those are his views. I mean, I think technology has moved, and I support the administration and wanting the U.S. to be. I don't know if we're going to lead the world, but the goal to lead the world in crypto and blockchain and creating legislation to support that, I certainly support that.
I'm not holding a grudge, David. It just sounds like a broken record. Please, Josh, tell me that I'm wrong.
I mean, I don't think you're wrong. I mean, I didn't hear the interview, so I'm taking your characterization as fact, which I'm sure it is. But I would just say, some of the key differences. Oh, Greg Murphy says Gensler's interview is 17 minutes. You won. Um,
Yeah, I'll never get those
oh,
17
you won't
minutes.
get back. Okay. Yeah. I mean, what I would just say, like, one key difference among many, many, many is, like, as we're talking about these permitted payment stablecoin bills, they're contemplating full fiat backing, right? That's very different from just electronic money that is, if we start thinking in greater depth about like fractionalized banking and things like that, right? Not even going into questions of, Bitcoin, just staying with the stablecoin for a second. Yeah, so okay, Adam Goldberg says sadly won't happen due to jurisdictional issues in the Senate. Oh, do you mean the potential combination?
Yeah, because the
makes
Senate Ag
sense.
Committee will never, ever, ever, ever allow that, Josh
Yeah.
and David. So look, there's a lot of stuff that continues to happen on the regulatory side. All kidding aside, I mean, obviously it's important for the industry to be plugged in to how some of this moves forward. One of the things we haven't spoken about, and I'm kind of ripping up the script a little bit, I don't want to spend a lot of time on it, David, Josh, but there's a lot of efforts that are happening on the state level side. So shout out to Michelle Gitlitz and Renato and Mariotti and David Pope and other folks that I'm missing. Apologies if I do. David, Josh, how important is it for us to keep up on what's happening in, I think Texas just signed a bill, and Wyoming, when we look at the Stable Token Commission? How important a part of the dialogue is that for both of you?
Well, in our practices, it's very important. I think it's extremely important. It really drives, where do you want to do business? Where do you want to be registered? Wyoming has certain benefits that you wouldn't see in Delaware and some other states. So it really drives a lot of our practice. But on a broader fundamental level, I think it's important that what the states are doing is in line with what the federal government is doing and what these bills are looking to do, because I think they need to be in lockstep here. And they're not always in lockstep, but I do think it's important that there's not this big divergence between the state and the feds. It's just going to make it harder for companies to do business that way.
Josh, is a lot of the industry waiting for, and I hate to use the words, but federal preemption as part of these conversations?
I mean, I think that's a big part of it, whether we like to call it that or not, right? So I think some things like the recognition of certain state chartered entities in other jurisdictions without having to get a separate money transmitter license in each jurisdiction. I think that's something that, there are going to be two-pronged approaches or multi-pronged approaches to, right? We've definitely seen shades of that in certain of the federal legislation, right? That would, should it be passed, that something like that could be embraced for certain types of entities that reach a certain threshold. At the same time, I think the states are also trying to, in many cases, make sure that they can try and push that forward, regardless of whether the federal legislation passes and in whatever form. So really like strong initiatives to try and get that kind of reciprocity from other states or recognition, because as David noted, when you're advising clients about where they should set up shop in the US, they want to know, okay, if I pick this jurisdiction, how will it treat me? What will I be able to do? What will I not be able to do? And by the way, am I going to have to go state by state by state to every other place where there are customers or other folks that I will be doing business with?
Yeah, and Josh, that's a little bit of the forward-looking calendar. It's internal for only WSBA members. So hey, if you're out there, join WSBA. But our next legal working group meeting, Josh, we're going to be doing one of our deep dives, which is how do you onshore to the United States? There's this growing kind of supply of companies overseas that have sort of been waiting for the environment to become a bit better, and now it's like, wait a minute, where do we set up shop, and what are the legal implications and the corporate structure implications, and oh God, the taxation implications. So we're going to be diving deep into that at our next legal working group meeting. Josh, I suspect it's going to be a topic we're going to have to raise here again in the future. I think, David, Josh, beyond all of the, hey, what's going on the legislative and regulatory front is David, what the heck is going on with the market? I'm going to say it, David. I don't mean it to be as provocative as it's going to sound. Do tariffs even matter?
Yes, they still matter, Ron. And actually, it's funny because while we're talking, President Trump is on Bloomberg, and I can see some headlines. It says Trump, for some countries ripping us off, tariffs will go up. So yes, I think it still matters. I think people are still paying attention. But I think there's a really interesting dynamic going on here in that Bitcoin has stayed solid and stayed this trading range between like 98 and 110 or 100 and 110. But the altcoins are really suffering. I think the altcoin market is at the same place when Bitcoin was at 20,000 that it is now. And I think what's really interesting is you're seeing a lot of the liquidity and momentum go into these Bitcoin treasury companies or these crypto treasury companies on the stock market instead of going into the altcoin market, which I kind of find fascinating. Because now you're like the momentum trades are now in equities and these treasury companies instead of in the altcoins. So I think that's a really interesting dynamic that's not getting a lot of airtime.
But David, I'm with you, and I agree. And I just wanted to raise this point. We have the altcoin market conversation a lot. The altcoin index is at 20 out of 100, which is pretty unfavorable, relatively speaking. But it's starting to sound like a zero-sum game for the alts, meaning money and resources are going into Bitcoin treasury companies. Pick the token, BTC, Sol now, and I think ETH, obviously. Is it always going to be the case, David, if it's going to one end of the market, the altcoins will always suffer? Or is there an allocation that should be happening there?
Well, I think it's kind of like the actual market structure itself is part to do. Because if these companies are trading on NASDAQ or NYSE, people can buy them in their equities accounts. Versus like having to open up either a Robinhood account or Coinbase and having a crypto account and then buying crypto. Yeah. And then I think, unfortunately, still, like I'm a big believer in some of these altcoin projects, and we've talked about different ecosystems that I think I'm really in favor of. But there's only so much liquidity going around. And then, on top of that, we are at new highs on the S&P and the NASDAQ, and there doesn't seem to be like, overhead resistance right now. It just sort of, we're in price discovery. So, there's more room to operate there. And for all, the funniest thing is that for all the market gyrations this year, I think we're only up around 5 or 6% for the year because we had that big V dive in April. So
on you're talking the S&P on the equities market?
On the equity front, I think we're only up 5 or 6% for the year. So people perceive there's still gains to be had. So it's this really weird dynamic that all this liquidity that we thought would go to altcoins is now going to, crypto equities.
David, just real quick interjection. Adam Goldberg's comment, never, ever, ever. To be clear, I don't think he's talking about the alts. I still think he's talking about the FTC and the Senate Ag Committee. Josh, from your perch here, I wonder how much of this impacts, and you can't talk specifically about client work per se, but when we see these structures popping up, I'm always curious about your perspective on how does market movements impact kind of the strategy of clients? Could you speak to that a little bit?
Sure. And which structures are you exactly talking about? Are you talking about these entities that are investing in Bitcoin and then selling their equity? That Correct. Sort of a thing? I mean, I would say every day there are new business plans and new business ideas coming in from all corners of the world. What I would say, though, is for those who have so-called altcoins or, projects that are going to be launching, they're continuing to move forward, even in the next few weeks with launches projected. So I think that it is interesting what's been happening with the flow of funds away. But, to me, a lot of this, and maybe this is just because I am not that far from an ocean, but it's kind of like ocean movements and tides in the moon. Things flow in, they flow out, they go up, they go down. When the altcoins reach a certain price threshold, I mean, I'm not an economist, you guys are.
We're not. We're clearly not.
You're playing one on Restream.
Yes.
But okay, amateur economists.
I'll go with that.
Okay, economist lights.
Yeah.
But yeah, I mean, and I don't give investment advice, but once things get to a price that people are saying, hey, this looks like it is undervalued, then I think money will start moving back in. I do wonder though. I do wonder actually for all of these entities that are forming, and I'm not poo-pooing it at all. I applaud anyone getting into the crypto space or other than fraudsters, but I do wonder, and I think we discussed this on a prior call, just if everyone is now doing the Michael Saylor thing, what are they doing differently from Michael Saylor, right? So what is the value proposition for one versus another, and how do you compare apples to apples unless there is some sort of some difference in investment strategy? But if it's buy and hold, then it's kind of, I don't know.
David, did you catch that earlier eloquent comment that Josh made about hearing the waves in the background at her beachfront compound while she's sort of on vacation? Josh, I want to push back a little bit.
Vacation.
Not everyone gets the opportunity to work at the beach, near the beach, but no, Josh, it's a good point, but I do want to push back on it a little bit. And David, I would argue that I don't know that some of the Bitcoin treasury companies need a differentiator compared to Michael Saylor, and the sole reason for that is limited supply.
Yeah.
David, do you agree with that?
I do. I just think that having a public equity that's just buy and hold, I don't know if that is going to be as efficient as a fund, like a BTC ETF, unless they're doing something different.
But what about fees though? What about ETF fees?
ETF fees are pretty inexpensive.
On some of them, yeah.
On some of the Bitcoin ETFs, I think they're 25 or 50 pips. So, that public equity and running that public company, all those costs would have to be wrapped in and somehow less than what the fees are that the fund is charging.
I think I'm with you, David. I think my real concern is premium above, right? Like, what is the actual book value of BTC holdings at some of these crypto treasury companies relative to their price? When you start seeing double, triple digit, 100% premiums, at some point those get rationalized. And I guess the question becomes, how do they rationalize?
Yeah, but I do want to give credit. I was at an institutional staking lunch on Monday hosted by Perkins Coie, and one of the interesting things is some of the companies, and there was one company that is acting as a validator and is doing different things in the Solana ecosystem. And I thought that was interesting, and they're reinvesting the money they get from being a validator into buying more Solana. So I think there are threads on this that are different. And so I think that is, an opportunity to differentiate and bring additional value versus just having an ETP.
Yeah. David, Josh called us amateur economists light. So now we have to dive into that.
Okay, I take away the amateur.
No,
I was trying to.
That's being generous, but yes, we can go down that road, because David, I want to push back on one more thing. We talked about tariffs, and we're joking about this generally. You and I speak on a regular basis. Tariffs still matter. I'm going to ask this question just looking at some of the information and reporting that we've seen. I guess my question is, do tariffs matter as much? And David, the reason I'm bringing this up is one of the Federal Reserve presidents, I think Chicago, President Goolsbee, came out and said that the big panic about tariffs and it's going to kick off inflation, it's going to really kill the economy, is really not playing out the way everyone thought it would. And part of that is January, February, if you remember, David, the trade deficit skyrocketed because manufacturers and companies were buying inventory in advance. And it looks like some of the challenges of tariffs are socialized through the chain now, not just, hey, David's got to pay 30% more for his rolls or whatever it may be. David, do you agree with that kind of assessment? Is it less impactful?
Well, it's less impactful right now because people did buy so much in advance and they probably had a runway to sell those. I still don't believe the impact is going to be as great as people say it's going to be. I think the mainstream media has overblown this. But on the flip side, the Federal Reserve, the chairman still thinks this is a concern regarding inflation and one of the reasons why he's not lowering rates. So I think it's a double-edged sword. I think ultimately I think what the market would benefit from is some finality on these tariffs, one way or the other.
Yeah.
Like it's been reported we have a deal with China, and I'd like to see the nuts and bolts of that. It would be great to get the EU done. Like we've heard about it. I don't know where it stands now, but I think the more clarity we get with our trading partners, the better.
Yep.
So I think that's kind of what's holding it back. But
yeah, go ahead, Josh. Sorry.
Oh, no, don't apologize. No, I think no, what I was thinking, what came to mind actually when you guys were just talking is this whole, I realize we're focused on the tariffs right now, but if we think about other kind of surcharges that have been added to things over time that never went away after whatever was the impetus for them, like whether it was like a fuel surcharge or like a COVID surcharge or something like that. I mean, I do wonder like how much of it is just, here to stay, like, and it'll be the new normal. It was implemented because of tariffs, and now it's just a way to like raise the
Hey, listen, I remember gas below $2 a gallon, and then one of the hurricanes hit that like pounded the Gulf of Mexico, and never saw those prices again. So, Josh, I'm with you. All of this tariff conversation, I realize it's our crypto roundup. David, Josh, all of this brings me back to Josh's favorite phrase, risk on. So if the impact of these tariffs are not as bad as everyone thought, big ifs, right, David and Josh, if we begin to see interest rate cuts, if you look at some of the economic data, job hiring is slowing but not bottoming out. Inflation's kind of percolating along, not spiking like everyone worried about. David, H2 of 2025 and all of 2026 could be a big risk on market, right or wrong?
I mean, look, it could be, but right now, like we're in an extremely bullish phase of the market, in the traditional market. I mean, we had this Middle East, I don't know if we want to call it a war, we had this Middle East flare up that could have gone to a broader war, but thankfully didn't. We still have some uncertainty about tariffs yet. And we could have had higher oil prices because of what happened in the Middle East, but for the most part, we don't. And the markets, the S&P and the NASDAQ are at all-time highs.
Yeah.
And, and Bitcoin's probably 5% from being at an all-time high. So I think there's a very bullish sentiment. And I think what's really interesting is there's a bullish sentiment in the markets, but I don't know that there's a bullish sentiment in the way the markets are being reported. And that's what I think is a very interesting dynamic.
Why, David? I don't, it's not a political conversation, but David, Josh, tell me why you think that's the case.
Well, I mean, obviously the markets being at an all-time high, they are, those are the facts. They are what they are. I just think there's always this, one shoe is left to drop, like, inflation's going to go up once these tariffs, get implemented, or, the regular consumers aren't going to be able to buy things now because of the tariffs. Like, there's been all this sort of talk and chatter, but we just haven't seen it play out.
Yeah. Josh, David, real quickly, just shout out to our colleague, WSBA member and friend Greg Murphy up in Toronto. Tariffs have certainly driven countries like Canada to engage on trade agreements and other issues like NATO funding. Fair point, and I think those are important conversations. And David, Josh, I think the three of us agree those are conversations that are long overdue. David, Josh, as we look at the kind of the marketplace, it's so hard to keep up with all of the news. And I know the three of us text every day of the week and then twice on Sunday with, did you see this? One of the things that really caught my eye, and I haven't read it, let's go there. FHFA, Federal Housing Financial Authority, I think is the acronym. I could be totally wrong. Basically, the government entity that kind of oversees mortgages has put out a memo on social media noting that they will be looking at the holding of crypto assets when considering mortgage applications. I mean, Josh, you hold a couple of trillion Shiba at a minimum. David, I know you're big on Doge. When you look at the next mansion, will you have to be declaring or be able to declare crypto holdings. Is that a good thing, David or Josh?
I mean, I have a definite opinion, but Josh, why don't you go first?
Josh, you go first.
I mean, I haven't thought of it enough. Ron, what is your opinion? Well, I quickly gather my own.
Yeah, look, I mean, I think the devil's in the details, and I think it's overall a good thing, but we need to make sure this isn't kind of a lowering of the credit worthiness. David, Josh, as I read it, it felt a little bit like no doc loans or low doc loans back in the day, and that's one of the things that concerns me. David, tell me you disagree.
I think it really depends how it's implemented. So like when you get a mortgage, they do a look back on your funds for a period of time. And they ask you where your funds came from. If it's not, they ask you that. And a lot of times it's easy to show. So I think some of this will have the same, are you going to have that same value for 3 or 6 months in your crypto account? And does your own wallet, does your own, cold storage wallet, does that count, or does it have to be on a centralized exchange? And do you have to explain where the funds came from? Because that's how usually what you have to do in a traditional account. So I think a lot of it's in the details, but ultimately, look, if somebody's holding, 100,000 or $250,000 or millions of dollars of crypto, they shouldn't be forced to sell it into fiat just to get some credit for that to get a mortgage.
Yeah. And David, it really very much sounds like a good idea for whales, maybe not a good idea for folks that are kind of holding a little bit of crypto in Robinhood. Again, I don't want to make it the have-nots conversation, but those are some of the things that concern me. But the devil is in the details. Josh, go ahead.
Yeah, I mean, I guess I'm just trying to think operationally when people are using this as collateral for their, or as, I guess, qualifying for their loan. Yeah. I guess, are we presuming they're using it instead of, say, income to qualify for the mortgage? I mean, I'm trying to think of mortgages that I've had, right? Like I put money down,
yep.
Right? I said, this is what I make. Here are my assets, right? But yeah, I mean, I think, at least in my experience, granted, I have not bought, gazillion-dollar mansions. I think it's been largely based on my income and how much I was putting down.
And
so I guess what I'm sorry, go ahead.
And ability to pay. Like
yeah.
Kind of what they're, right. Yeah.
Exactly.
David, go ahead.
I don't see why they should be excluded from, look, let's just say, Ron, you're a Bitcoin whale, Ron, and I know you have like, I don't know, 50 or 100 Bitcoin on your
I had this coming, John, but go ahead.
No, but like for argument's sake, let's say you had 10 Bitcoin in your Robinhood account.
Yeah.
Why shouldn't that count towards a mortgage? Like, why not? Is it any, maybe there's a little discount that's placed toward it, but it should count. I won't say it's no different than owning like 100 shares of Google or whatever that financial equivalent is, but there should be value ascribed to that you get the benefit of for mortgages and things like that. So I'm going to push back on your no doc loan, declaring you made 90,000 a year when you made, not you, but just like somebody making 30,000 a year. But so no, I do think it should be included, and especially, I don't know what the mechanism is, but like, look, if it's in your Robinhood account, why shouldn't it be?
Yep. And for everyone in the audience, I'm totally joking. Josh and David don't have trillions of Shiba or Doge. I would totally a joke. Please don't email me later on about it. Adam Goldberg, again, it's likely the role of retail have been conditioned and rewarded for buying every dip. Again, fair point, Adam. Josh, David, we're approaching some time. There was one other topic, and Josh, you mentioned it in the virtual green room before we started. Would love you to kick it off, which is really the conversation around crypto M&A. And there have been a couple of articles, I believe it was Forbes, I think certainly Bloomberg has reported on it, so please don't cite me, that really the background is really preparing for a big wave of crypto M&A, particularly TradFi buying into the space. Josh, what are you seeing?
So, I mean, well, we're definitely seeing crypto M&A. I mean, we just, inquiries are coming in regularly, I would say, and I'm sure others are seeing it as well. I loved some articles and some thought pieces that David has posted recently, including one that our own David Brill posted about Goldman Sachs's forecasts about a significant rise in crypto M&A activity. I think that it had said that there were just shy of 16 billion in deals in 2024, 15.8 billion, which was up from 1 billion in 2019. And that already in 2025, 6.4 billion has been recorded. If you actually read some of the article that went along with that, Yasmin Kupal, I may be mispronouncing her name, who is a Goldman partner who leads Goldman Sachs's coverage of digital asset companies, had explained that she expected a, quote, wave of consolidation in digital assets as folks look to scale and diversify. And she also said that in her view, industry leaders are taking a buy, not build approach. And she gave some examples that related to acquisitions of Deribit and Bitstamp recently. But yeah, I think she says a lot of this has to do with the convergence of TradFi and crypto and rising demand from investors. I just think it's exciting. And I think it's what we're going to be seeing more and more. Interestingly, some of the deals that I've been seeing have involved acquisitions where it's not necessarily an acquisition in the US, but it may be U.S. folks even purchasing outside, but just a just an increase.
Yeah, David, weigh in on this, and Josh, thanks for that. I mean, you've written about it, and you and I have spoken about it, and you publicly talked about it, David. Buy versus build seems to be a smart strategy,
especially when you think of the security involved in managing custody crypto or exchanging crypto and how complicated that is and the threat vectors that still exist in our space. I think more than anything, that's a real reason why, if you are custodying crypto or you're holding it in any way, that you want to buy more than build, unless you're really confident that your security is top notch. So I think it's that security perimeter, and also just, when you buy something and it works and it's traded and you know what the volumes are, it's sort of, you're buying something right off the shelf that you can plug and play, versus building, and how long is that going to take, and can you get the resources, and can you get the personnel, and because there's really still a dearth of really knowledgeable people in our space, and so they come at a premium. So I think that's an issue too.
David, is it, I just want to continue on that thread, and I agree with you both. I wonder, we'll see consolidation, right? Bigger, well-capitalized crypto companies buying smaller use case digital asset companies that have unique and interesting and important solutions. Will we see more TradFi simply scooping up, David, some of these companies as well?
Yeah, I expect that to be the case, especially once these regulatory issues get resolved. And, one of the things you have to remember is, right now in the way things are, you really have to buy these companies and hold them as separate entities. And, they'd have to be outside of any kind of regulated perimeter. So I think you really, it's very difficult to sort of have some kind of subsidiary that's not in the regulated, pile of companies that a big institution has. So I think these are the steps that are going to take to allow TradFi to get more deeply entrenched in crypto.
Yeah. David, Josh, we're coming up on time. I was misspeaking. I do have one more topic. And David, I got to ask, because you and I spoke about it earlier. Again, I haven't read her commentary, but SEC Commissioner Peirce had commented about in-kind redemptions for ETFs. David, for the folks in the audience, and you and I have chatted about the ETF markets for crypto and digital assets for a long time, why are things like in-kind redemptions important?
Oh, you know what, Ron, I think with where we are, I think that's like a whole other episode for us to talk about. But look, I will say that it just makes the market more efficient. And also because people in the space, if they're buying options or if they're buying certain things, they want to have an in-kind redemption option instead of just getting a cash redemption option. So I think that's important. I think that's a full segment commentary. But
that might have to be a WSBA webinar. Josh, go ahead.
Yeah, I mean, it would be a big change across the board, because even if we think back to when Bitcoin futures were approved many years ago, part of the whole reason that, the justification for why they was, well, it's not going to be in kind. It's just going to be, cash settled.
Is it weird that we keep saying it was so many years ago and it feels like it was a couple of lifetimes ago, Josh?
Seriously.
It
David, go ahead.
It also allows you to trade sort of paper Bitcoin, because if it's not in kind, you're just trading in cash, whereas in kind, you have to have the actual crypto.
Exactly.
And like
Right.
another episode sometime we could talk about that. You know, one of the things with the ETFs is great is it allows people, it's easier for people to buy the crypto and hold it like on a traditional exchange. But the downside is that, you know, people can short it, and it sort of creates more liquidity in the marketplace than actually the Bitcoin that exists.
Yeah.
So the in-kind is helpful with that.
David, Josh, thank you both. Sonia, we did see your comment, but then does the mortgage company track your wallet? I think that's a conversation further down the road. I'm not even sure any of us are prepared to even have that dialogue. David, Josh.
One thing I would ask is just to add that would mean that any of those wallets that are considered for mortgages would all have to be KYC wallets. And so if you wanted to use your personal wallet, I'm sure it would have to go through some sort of KYC enable it to be considered. So that's a whole nother, yeah.
I don't think any of the three of us have the energy right now to have the KYC wallet conversation. David, Josh, we're coming up on time. Next week is Independence Day here in the US. We will not be here on Friday, but Josh, be prepared. David is actively pushing that we do something the day or two before. We may be back next week early. I'm not quite sure. Josh, David, summer is full underway. Josh, I know you're at the beach compound over there, but what's coming up for you in the lead into July?
The lead into July. It's
work, just work.
Pretty much just work. I
think we lost Josh.
Lost her.
David,
okay.
I'm here.
Okay, you froze for a second. Sorry, go ahead, Josh.
I was just saying, like, my kids are finally in like day camp. So yeah, just working, kids, not going anywhere. What about
well,
you
I
guys?
wanted to ask David because I know is it Bezos who's lending you the yacht for the Mediterranean trip? David, I'm just trying to contextualize here.
No. I am really looking forward to taking a cruise with my father and daughter, and exploring parts of Europe that a few countries that neither of us have been to. So I'm really excited about that, and really quality time. And then my daughter's off to college after that.
Sure. Well-deserved, old friends. Josh, I'm trying to get David to dial into one of our crypto roundups from the boat. I don't want to do that to him, but damn, that would be fun.
I think we might be able to make that happen.
David, Josh, thank you both. I'm going to spend a bit of time trying to understand where the market's going and whether or not we hold 107, David. So expect some text messages from me. And I think on 4th of July, my sister's having a barbecue, so that should all be fun. Thanks. For everyone in the audience, thank you so much for joining us. If we missed any of your comments or questions, drop us a note. Email us at info@wsba.co. We might be back next week. I will keep you all posted. We'll post on LinkedIn. We'll post on X. We'll post on YouTube as well. Thank you, everyone, for joining us. We'll see you next week. Have a great weekend. Bye-bye.
Bye, everyone.